Hey guys, welcome to the channel. This is Kevin. I'm glad you joined me. Kevin Gerrity, as it says on the screen. Listen, I am started this channel so I can share some of the insights and pearls that I've learned over 30 years of investing. And I think you can see based on the screen that I have some marks and some scars to show from the 30 years, particularly with the gray hair that I have in my head. But the reality is I have learned many insights and many valuable tips and tricks, and I want to share them with you to help you start off 2026 as the best year yet. I have a couple picks that I want to share with you. You saw them on my thumbnail. They're probably not like hidden companies. It's not particularly gems that you might find. They're pretty obvious, strong companies in the US that have strong reasons why I'm picking them for your top picks for 2026. So those top two are Amazon and Nvidia. And I want to jump in some data today to help justify why these should be in your portfolio. If they're in your portfolio now, awesome. If they're not, I would recommend you add them or even strengthen your position if they're in your portfolio because of what we're seeing in the financials and because of what many analysts feel is going to be a top year for these two companies. One, Amazon is set to break out. It had a lackluster 2025. And then two, the question is Nvidia undervalued? As crazy as that sounds, many think the AI bubble may burst. But I'm telling you, I think when you look at the financials and you look at some of the key metrics, Nvidia may in fact be undervalued. It may still be a great play for you to add to your portfolio. So let's jump into some data. First, I want to just set the stage for Amazon. I want to share some videos with you and I'll come back and add some comments. But let's take a look at last year in 2025. Many individuals, many investors had a feeling of a little lackluster or just underwhelmed with Amazon's performance. And that's because their growth rates were low. It was 4 to 5%. But you have to remember, like in the beginning of the year, we had this tariff situation that loomed over them. And what was it going to happen? It had significant impact on their business. But also, Amazon had a significant investment in capital spending, which pushed them down, and it frustrated many investors. And I want to jump into a report right now from CNBC, from their analysts, that are going to talk a little bit about that capital investment and how it could pay off in 2026. So let's jump into that, and I'll come back and share some of my thoughts on the video itself.
There's two names, but still in the mega cap tech area.
Yeah, well, Jenny started off the show saying we can't just keep picking Amazon, but I will say Amazon had a pretty lousy.
You disagree.
Yeah, she did that to poke me, but Amazon's had a pretty lousy, lackluster 2025. I mean, maybe it's up 4 or 5% on the year, but I think about that as like a reset, a stall. And if you're thinking about moving forward, we're 2026, you've got to pick one stock, and it's really hard to do. But I just think that operational efficiency, logistics, advertising, Amazon Prime, the video service, they've got a lot of levers to pull. And I think at some point here in the very near future, we're going to see the share price catch up to the fundamentals.
Malcolm, you're in Amazon still. It gained about 5% in 2025. Do you think you should stick with it, or are you going with Jenny and saying, I think maybe it's time to cut and run?
No, this was actually going to be one of my big picture ideas or big picks for 2026. And maybe to Jenny's point, I thought it was a little too obvious and a little I've been championing this one for a while. But I agree with Kevin when he said logistics and operations. I think maybe he's talking specifically about robotics. And I think a lot of the investments that Amazon has made into robotics have actually sort of hurt their short-term prospects, but actually will impact their longer-term prospects going forward, 2026 and beyond, because something like 600,000 warehouse jobs they're expecting to be replaced by robots in the next couple of years. And they're also expecting Morgan Stanley's estimate was something like up to $4 billion of savings is what Amazon should see this year going forward from installing those robots and investing in robotics as heavily as they have. And so all of that should fall to the bottom line for Amazon, a company that's so tight with its pennies. And so I imagine that to be the catalyst that really helps to get those numbers moving this year.
So I'm going to stop there, guys. Let me jump back over to the main screen and share. So you heard from Malcolm there that investment in their capital spending or their investment was in robotics, and they have an opportunity to create significant efficiencies. Now, I hate to see any jobs lost, and 600,000 jobs lost across their warehouses is not anything to laugh about or to be happy about. But the reality is it's going to create significant efficiencies, significant savings. Many are estimating 4 to 5 billion in savings in the long run. This is one of the reasons why I'm selecting Amazon as a top choice in 2026. Is their investment in robotics and the impact that's going to have to create efficiencies. The second piece is their dominance in the e-commerce world. The reality is whether, I've lived in San Francisco, I've lived on the East Coast, I've lived in Dallas, you see the trucks everywhere. They keep coming. The packages keep coming. The reality is they have a 40% share of the e-commerce business in the United States, and it's showing signs of getting stronger and stronger. When you look at last quarter, there was an 11% growth rate year over year for Amazon. And they're showing stronger signs, not only in their retail business, but also in the grocery business, which I think has an opportunity to show real value in 26. And the last reason I would say is many perceived the AWS or the Amazon Web Services to be a weakness for them last year. I think there's strong signs to showing Amazon is reaccelerating that business. They had a 20% growth year over year in the last quarter in their AWS business. There's signs now they want to strengthen or widen their partnerships with key sports, and they're already in the NFL and NBA and PGA. They want to create a stronger foothold in those areas, which will continue to strengthen the AWS and the advertising business for them, potentially creating a real massive profit engine for this organization. So those are the three reasons why I would say you have to add Amazon to your portfolio or strengthen your position in 2026. It's looking like to be a great year for Amazon. Now let's take a shift gears a bit to our second choice, which is NVIDIA. As I said in the beginning of the report, I'm going to show you some data. I'm going to jump to a chart in a moment to show you, is NVIDIA in fact undervalued? As crazy as that sounds, it has the largest cap of any company in the world, but is it undervalued in the AI space? And is there an opportunity to continue to shift into this company? Hopefully we haven't missed it, but there's an opportunity to shift in this company and strengthen your position. So let's take a look at some of those data I was saying, and we can have a further conversation. So like I said, I wanted to show you that article to say, is NVIDIA in fact undervalued? This is an article out of Motley Fool, as you can see. And look at the title. Could NVIDIA be the most undervalued stock in AI right now? There's a few parts of this article I want to call out. Hopefully, you'll join me and say, yes, in fact, there's opportunity to continue to invest in NVIDIA. It's not too late. The AI bubble is not bursting. There's opportunity here based on what we see. So if we scroll down, you can see, as I mentioned, market cap of 4.5 trillion, largest company on the planet, but yet by many fields continues to be undervalued. If you look at the price to earnings, currently it's around a 45.5, which makes many people feel that it's an overvalued company. However, when you look at the forward price to earnings of 25, and the ratio was well below below 1, many feel that this is an undervalued company. There's a couple things that jump out to me on why I like this stock. First off, if you just go down to the fact their financials are strong, we all know that. NVIDIA is, if anybody jumped in that train early, you know it. But their financials continue to be strong. If you look at last quarter, it was a 62% year-over-year growth, and the revenue looks like it will continue to climb. But that's not the reason. There's two primary reasons why I like NVIDIA. One is this one you can see highlighted, that the U.S. agreed to lift the ban and allow NVIDIA to sell its H200 chips into approved commercial customers in China. This has an opportunity to open up significant market for them and be able to add more revenue than they weren't in prior years, being able to lift that. And the second, I think, is a really smart move by NVIDIA. If they scroll down here, and it's based on their CUDA software. So what they did is they went into institutions and universities across the country that were heavily investing in researching AI and gave away this software for free. Really smart for them, because now they hold over a 90% share in the data center GPU space, which is one of the largest and fastest growing markets ever seen. So really smart for them to go in and find these institutions that are doing research, some of the top universities, top research labs in the company, give away their software for free. So all of their work that they're doing and everything that they're embedding is based on the NVIDIA platform, the NVIDIA software. And so when this this will be able to show significant return from them and continue to embed them into a dominant position in this in this market. So I think based on those two things alone, the strong financials they have outside of that, based on their ability to open up new markets in China, and really for them, the smart move of embedding their software into researches in top universities across this country that are doing AI work, is just another reason to go with NVIDIA. I don't think the bubble is going to burst. I think there's opportunity to continue to move on NVIDIA. And so that's my choices, guys. I would say top picks, you got to start strong, as the thumbnail says. The top picks, Amazon for sure I would go with. And I'd heavily encourage you to look at NVIDIA. I think it's an undervalued company and still a great opportunity to invest. I hope you enjoyed the video. Please like and subscribe, and I'll see you soon. Take care.